Aloha, my name's Anna Covert, and I'm coming to you from my battleship here on the beautiful island of Oahu. This week on the Covert Code, the topic is why small businesses hit growth ceilings and how to break through them. My very special guest is Rob Aquino, CEO of JBS Corp and Entrepreneur Books author of The Small Money Business Game, Hidden Strategies that Turn Survival into Scale, which is hitting shelves on June 30th of 2026, which is coming up really, really soon. Rob comes from a deep background of all things finance. He's been a CFO, financial advisor, wealth strategy management consultant, and founder. So he really understands why small businesses hit growth ceilings. In his upcoming book, he shares the Breakpoint Framework, which provides real-world examples and understanding for entrepreneurs to really understand their numbers, how they got them, how to overcome and break through any kind of limits in their scale, and really scale with intention overall. So thanks so much for being here today.
Thank you, Anna, for having me. I'm excited to talk.
Great. So to kick us off, we like to begin our story with the little Rob Cliff Notes of how you got from where you were to where you are right now.
Yeah, so I'd like to say I grew up in small businesses. Both my parents were entrepreneurs. All of my aunts and uncles growing up were entrepreneurs. And we primarily had bodegas. I'm not sure if you are familiar with bodega. Okay, cool. So we grew up, in New York as Dominican American immigrants. And the bodega is kind of the place you go to for everything: coffee, breakfast, lunch, dinner, your household goods that you don't want to drive all the way to the grocery store before Walmart invaded. So, my mom raised us primarily by herself, and she was operating businesses. So that meant, no clocking in and out, no 9 to 5. And so half my childhood was inside of a business in a bodega. And that approach, along with working inside of JBS, actually, while I was in high school, at my stepfather and brother's accounting firm at the time, I decided, why not study accounting? It's what I know. It's what I've been working in. And so studied finance and accounting, went into wealth management with Northwestern Mutual, learned how to build a business, ended up naturally working with entrepreneurs as my ICP, considering I knew them so well. Did a lot of great estate planning work, retirement planning work, M&A activity, helping entrepreneurs who essentially their whole net worth was their business, helping them figure out how to liquidate that effectively and go into retirement. And my brother had been recruiting me for many, many years. I was very happy as an advisor. COVID hit, and that changed everything for us. Mm-hmm. And so I've been here for about 6 years now, really scaling the firm.
And you've done some incredible scale. I was reading your bio. So what, 500% growth? Is that the case? How did you get there?
We've 5x'd since I've been working with my brother. A few ways we've gotten there. I think this is a common misconception in scale. You don't get to growth by adding, you get to growth by subtracting. Mm-hmm. So when I came to JBS, I think we were at about 15 services. So we would do a lot of tax prep work during tax season. And then off season, we'd literally do anything that you could do with an administrative team and some air conditioning in the summer. So we would do, translation services. We would help people do small audit cases for a meals tax or sales tax. We would do payroll services, all sorts of things. At one point, we were a travel agency back in the early 2000s.
Wow.
Like on top of the tax business. And so when I got there, the first thing I started doing was removing everything that wasn't tax, enhancing our focus, understanding what our pricing strategy was, what our market was looking for, what our bottlenecks were, and the thing that was bringing in 98% of the revenue. And we were able to double that relatively quickly. And then I realized that the real market demand was for B2B, right? People wanted to understand their books. They wanted to do corporate tax returns. They wanted to start a business. They were looking for support. And we didn't have a product at the time. So when I came full time in 2020, we've started that product from zero. And it now represents about 40% of the business.
Wow. That's incredible. Congratulations.
Thank you.
So tell me, what, and then this is I'm sure you've been asked this many times like I am, why did you decide that now is the time to write this book? And have you been working on it for a long time? Tell me the book story.
That's a great question. So I've always wanted to write books ever since high school. My mom and I had a conversation once. I think it was my sophomore, junior year. We were just driving, I think, to the store, to the bodega. And she said randomly, like, hey, son, I hope you make a lot of money someday because you like a nice lifestyle. I know that I'm financing it. And so whatever it is you decide to study in college, I'm not going to choose for you, but pick something that earns well. And then she didn't know this at the time, but I was sitting there thinking I want to be a writer.
Mm,
And when she said that, I said, oh my God, writers don't make money. I already knew that much at 15.
right.
So I was like, I can't write. And so I decided to study accounting because I knew the tax business was there and maybe I could help. And then when I went into wealth management, they gave this 21-year-old writer, in my mind, access to wealth management tools, retirement planning, and I joined the FIRE movement. Are you familiar with FIRE?
I'm not.
So it stands for Financial Independence, Retire Early.
Oh, wow. Ooh,
It's a
nice.
big movement. There's a
Yeah.
few 100,000 of us all
Cool.
around the country. And basically the premise is why work 40 years to retire 20 or 30 years if you could work 10 or 20 years and retire for 40?
Absolutely.
The only caveat is you have to save 50% or more of your income, right? Because how else do you do it?
Right.
So I got this idea in mind that I was going to work my butt off and I was going to retire at 40 and then I would write. And long story short, about a year and a half ago, Harper found me, said, hey, have you ever thought about writing a book? And I said, yes. And we talked about it. And he said, well, we don't do those kinds of books. Tell me about your business. And I started telling him about my business's process. And he was like, have you ever thought about writing that? And so Small Business Money Game was born.
Wow. So what was the book that you wanted to write?
I don't know how much time we have today, but it is a book that tries its best to synthesize and study the philosophy of success.
Interesting.
I truly want to spend my life researching where the barriers are personally and sociologically, not just financially. So that will require probably a decade or so of research before I start writing.
Well, that'd be fun though. Sounds like a
Yeah.
fun book to write.
Yep. And my wife's writing it with me. She's in psych. I'm going to need her.
That's wonderful. So what do you think are some of the most common reasons that small businesses hit the ceiling?
I think there's two very easy ones that nobody wants to talk about. The first one is it's absolutely the hardest thing that a person could do financially is start a business and grow a business because you're in this cycle, in this paradox of, well, to get to the next level, you need more resources, but to get the resources, you need to get to the next level.
Yes,
And
the chicken
so,
egg.
chicken egg.
Yes.
And I find of all the, I've worked with over 3,000 entrepreneurs. Of all the entrepreneurs, I think the common trait that I see over and over is resourcefulness. And when you think about that paradox, it makes so much sense because you have to get it done with what you have, even though it's nearly impossible. And I think that's why we see a lot of small businesses failing. And then the second half is, if I can be frank, I think there's a lot of people starting businesses today that have been romanticized, that think that starting a business is the way to go, that it's easy, that it's lifestyle. And I think a lot of them figure out the hard way 3, 5, 10 years in that isn't the case.
Absolutely. Yeah. I mean, that, and then you have to be comfortable failing too, right? And
That's
that's,
right.
I think, one of the big things that I see, I own an advertising agency, the largest
Mm,
digital one here in Hawaii. And so we work with a lot of entrepreneurs on launching their brands and then going through one thing that we've seen recently, it's been, the solar industry is one of my specialties.
mm,
And with the federal tax credit going away, there's a huge, shift over in
mm.
industry. And so a lot of those small businesses that were maybe things were going great, then they weren't prepared. So it's also like riding that wave,
Yep.
and
Yep.
how to know when to pivot. Tell me more about your framework.
Yes. So I love the wave analogy. And do you surf, Anna?
I don't. I mean, I know how, but I don't
Yep.
surf. Yeah.
So I use this analogy of like waves and ocean. I think it's a great, and many have in the past, I think it's a great way to think about the market, like this vast open ocean. So what happens is, and I'll try to paint this picture as best I can, people build their boat on shore naturally. So when you're building a business, you have all these ideas, you have all it looks good and it feels good, and you ride it around in the bay, and it just feels like the world's your limit. And then you decide, okay, I'm going all in. You leave the job or you hire the person before you can afford them, and you go into the open market, and you then realize that things can get stormy. You realize there's other boats out in the water and they're big, and if you get too close to them, they can capsize you. You realize that the boat that you built on shore is now too small to carry the resources you have. And so you have to figure out how to manage this boat while you build another one out in the ocean. And this is kind of a lot what strategic planning looks like at a business, large and small. And so I think what most people don't realize is when the boat gets too small, when they have to build a bigger boat. I think people also, the ones who have grown, let's say because of market conditions, a lot of businesses grew during COVID because of government relief or grants. I think a lot of them figure out how to grow, how to hire people, how to build benefits, how to build compensation plans. And then no one ever prepares them for when it's time to shrink.
Right.
So a lot of the turnarounds that I work on, these situations where businesses were doing good and now they're not doing so hot, it's because they work so hard to build the skill to grow the business. They can't even imagine that they now have to go build the skill to shrink the business.
Yeah.
And yeah, it's just a wonderful and crazy ride.
It certainly is. And I guess we have to ask the question, or we have to talk about it because everyone wants to talk about it, is how is AI impacting what your framework looks like in both positive and negative ways?
So I'll start with the negative so I can end more positively. Funny. So obviously people feel like they're going to get disrupted. Everyone feels like they're going to be disrupted, but no one really knows how. I think in the short term, you're going to see a lot of clients, and it depends on who we're talking about. But if we stay in the SMB landscape, 500 employees or less, I think that clients are going to think, well, I could be more self-reliant now. So maybe I don't need JBS for bookkeeping support, or, maybe I don't need marketing services, copy, etc. And they're going to do some stuff probably that they shouldn't do. And they're going to realize later on that they've made mistakes, and then they'll come back. But in the meantime, I think it's going to create a cash flow squeeze.
Yeah.
So I think there's some stuff going on there. There's the incumbents that are going to come in and try to compete with us now because it's cheap enough to, in many ways. Though I think they'll fail. I was just at lunch with a few banker partners of mine. And it's funny to see clients leaving the big banks that have been acquiring each other or smaller firms and going back to the relationship banker because they just want to work with a human.
Right.
And so I think in many ways it's going to be very positive for the human relationship side, and the boring stuff will get automated. What I worry about, to finish up the negative, is I keep having this recurring dream of people's AIs just talking to one another. So it's like you send me an email, but it was you using AI, and then I'm using my AI to respond to the email. And it's like, Anna, are we even talking at this point? So I think there's some things to get through now.
I think that's really interesting. It's like it could be that's like a sci-fi right there.
It literally. And I wonder how decisions are going to get made. It's like, well, if I'm pitching you services or I want to work with you, am I pitching you or am I pitching a large language model and writing this in a way where I know where you copy and paste it, it's going to say, yeah, this is a brilliant idea. And there's so many things in that angle. So I'm actually trying to do more physical work, in-person work, Zoom work, as opposed to back and forth on email, because I think it's starting to get a bit ridiculous. On the positive note, I think what it's going to do, especially over time, is it's going to lower the barrier to entry on a lot of products and services. I think it's going to allow small teams to finally compete with the large players. And over time, my theory is that, 30 years from now, we won't really need 10,000 person companies. Those will be extinct. And that's good because I think it'll bring the humanity back to capitalism.
Yeah. I mean, I don't think it'll take 30 years. I think we're looking at maybe 10, with the way that it's growing right now and scaling. Yeah, I think you're
ideal.
right.
I think that'll be ideal for us both and all of our clients. Because, the more consolidation that occurs, the harder it is for the economy at whole to do well.
Indeed. Indeed. So what are some of the other breakthrough, framework tips that you have that can help people today?
So I'll work you through the first couple steps of the breakpoint. So essentially over the 3,500 or so clients, and remember, I get access to wonderful sensitive data. That means I have tax returns, bank statements, accounts, P&Ls, balance sheets, etc. So I've looked across all sorts of industry, all size companies, and I kept finding this weird correlation. So I have these 7 steps that are the breakpoints that take you from $0 to 25 million in revenue. And
Wow.
I've basically identified like these 7 layers, these identity layers is what I'm calling them. In the beginning, you're a salesperson, you're the founder, it's exciting, you're just trying to get someone to buy something from you. And that takes you to about 100K. And then at 100K, you have to a quarter million. You have this concept of, do I stay a solopreneur or do I build a company? And you have to make this conscious decision. A lot of people stay solo, lifestyle business, and that works. At 250 to 500, that's like the hiring challenge is what I call it. So it's like, you know how to do some things, you might have some assistants, but now you need to learn how to hire real technicians, salespeople, delivery people, product. And I think that now you have to become a recruiter. All of a sudden, it's like, so you've had to learn sales, and now you had to learn how to build a company, and now you have to recruit. And the learning never stops, Anna. And what I find is where people get stuck is at the role that they can do themselves.
Mm-hmm.
And so 2 things occur. One, they can't become the operator, the CEO, the shareholder, etc., and or they don't know how to hire that person. And
Right.
the combination of those 2 things is where most people flatline.
Wow. Yes, I can see that being. It's kind of like almost. And then you have to think about like the Peter principle, and I think that's part of even before you even get into business, really looking inside and saying, do you want to stretch, right? How stretchy or Gumby do you want to be?
That's right.
Yeah.
Yeah. I work with a lot of high income W-2 people that decide, I'm so good at this, I'm going to go start my own business. And then they wonder why people don't want to buy from them or why they're so hard to sell, right? And it's like, oh, so you thought that because you cooked really well or you know computers really well, that you could convince people to get into a service engagement with you. Like that's a whole separate skill.
Yes.
And they don't see oh man, I'm a rookie again and I'm a beginner and I have to learn this skill. Typically because, they've had these accolades and they're high earning. And these identity shifts, they're very hard to execute. I speak from experience, right? As a founder, I have a couple companies. I invest as an angel. It's hard. Sometimes you're convincing yourself, man, what am I doing? I can earn so much more money, so much more doing this. So I think it's important to understand your why.
Yeah, I think that you're right. And then also when you think about the numbers themselves, I mean, it's so easy to decide, oh, I don't really want to be the bookkeeper. I don't want to really look at the credit card statements. And I've done this myself, I'll let someone else do it, and
Yeah.
then realizing, oh, wow, if when I did start looking through them, what is this charge? What is this charge?
Yeah.
And really, because software, I mean, we do a lot of high-end technology consulting, and it probably be shocked. I mean, most, even small companies up to large companies, we say with just a couple technology consulting sessions on the low end, like $500-600 a month, all the way up to like $500,000 a month in software and different things that people thought that they needed or they didn't even realize they were paying for. And it's been years that they've been paying for it and they didn't even know what it was, right? And so, what are some of these ways you help people understand their numbers?
That's a great, I love to hear that story, Anna, because people are so scared of their books, their finances. Most of the book early on really focuses on your relationship with money. And the
Yes.
reason I call it the money game, and this will circle back to how I get people to think about their numbers, is I try to simplify things. So have you played Monopoly? Did
I
you grow
love
up playing Monopoly?
Monopoly. I was a
Oh,
Monopoly
perfect.
queen.
I was going to ask you before we started, but I prefer when it's a surprise.
Oh yeah, no,
So-
I even did a Monopoly competition, and
Oh,
I
no,
placed third, I think. Yeah.
no kidding. So
Oh
this is going
yeah.
to be awesome. This might take up the rest of our time. So the small business money game was an idea that came to me in 2014, and I was calling it the monopoly theory. So at this time, I've been an intern at the wealth management firm for a year. I'm talking to my brother, who's president of this firm here, JBS. And I'm like, Alex, isn't it crazy how much the real world is just like a large game of Monopoly? And it's like we have a central bank, we have these players who make these luck-based roles, right? Because a lot of this is luck. Successful people don't want to say it, but a lot of this is luck.
Yes.
But it also is what you do with the luck. And so you roll these dice, and depending on where you land, well, you still have to buy and you still have to negotiate. So I just started thinking about the game of Monopoly, which has a fascinating history. I don't know if you know.
No, I don't know the history.
Oh my goodness. Funny, it was monopolized. It was someone else's game. Lizzie McGee invented it, patented it in the early 1900s as the landlord's game. I don't get into this in the book because I didn't have the word count, but I think it's a funny story. She built the game to teach about the downsides of capitalism, particularly when you allow people to concentrate land ownership. And this was from a famed economist in the late 1800s, Henry George. We call it Georgism. And so she just loved this idea. And she was like, I have to teach more people this. So she built a game, the landlord's game, to say, hey, don't let wealth concentrate in the hands of a few.
Wow. Oh my gosh. That is like such a that's exactly what it is. Because once you own that strip or that corner, I used to like the reds and the orange corner. That was my favorite corner because that was the cheapest to buy. And actually even the blue and blue corner, like the cheapest ones were the easiest to buy. When once Boardwalk, no, you don't buy Boardwalk, then it's way too much to build there. Like you could have the cheapest stuff and put a hotel on there, like lickety split,
You are a master Monopoly player.
Oh, yes.
So statistically, how much do you know about game theory? You've heard the term.
I mean, I went to business school, so I know about it.
Okay.
But you probably know more. Tell me.
So if you go take the game theory principles to a finite game like Monopoly, it's the stats of if you buy orange or red, like you're going to win if you buy orange or red.
Right.
Not just because of the return on investment, which you just pointed out, right? Cheapest return on capital if you do the math, but also because it's the most likely place for people to land.
Right.
If you start looking at the board, at where jail is placed, at the fact that you're going to roll sevens the most, it's like that's where people are going to land. So that's what you want to own.
Yes.
But Monopoly is this game where, and I'm sure you play with your family, and I'm sure you dominated, Anna. I'm sure like you won most of the games.
Yeah, pretty much.
And the question becomes, well, how is Anna winning a game of luck over and over? Right? We all start equally. We all have $1,500. We all collect the same income. So in a theoretical world that a lot of people are interested in right now, where we all have the same amount of money and we all earn the same amount of income, why does this inequality show up so fast?
Wow.
Right?
Mm-hmm.
And
yes.
I think that while the game is luck-based, it's also very much skill-based. I think that you've picked up on something. You probably always had this natural gift of pattern recognition. So you realize without looking at the game theory math that I started doing, I did a lot of research for the book. And then, of course, I didn't use any of this.
The word count theory is that's a form. So like, no.
Yeah.
Can't go any further than that. I'm like, wait, but I'm not done. They're like, you're done.
And I even expanded it 10,000 words. Like,
oh, you did? Oh.
I still couldn't. This was like too much. And it was like, Rob, we're talking to small business owners. Why are you getting into Monopoly? So anyway, I kept it very high level. But you got good at this game. And I think there's a clear correlation between you understanding ROI growing up in a fictitious money game and you understanding ROI in the real world. You understanding how to negotiate, how to make decisions quickly, fiercely, how to cut your losses quickly. Like these are investment principles 101. And I don't think you need to teach these in business school, in my opinion. I think once you got the language, you became a lot more dangerous. So did I. But these were all things that we knew growing up.
Yes.
And so one of my favorite things in Monopoly, in the official rule book, is this concept of the bank. The bank technically cannot run out of money. This is in the rule book. And so if the bank runs out of money because the game is going so long, what you're instructed to do is go cut pieces of paper and write 500 and write 100. This was a game that was invented in the early 1900s. This is quantitative easing that we invented really over the last decade and a half. And so I think that if you took the principles of Monopoly and then applied the fact that life is an infinite game, a game that does not end, unlike Monopoly that has a finite ending, it's virtually the same game.
Wow. It is. That's interesting. So someone basically stole the game and then renamed it Monopoly. And how did they not get, if it was patented, how'd that happen?
Oh, there was a whole like 30-year lawsuit. There was a wonderful book written by Mary Pylon, I believe, called The Monopolist. There was a whole 30-year lawsuit. Hasbro, what was the game before? Parker Brothers owned it, bought it. He swooped in. There was two versions of Maggie's game. There was like the good person version, and then there was like the bad monopolist rules. And so he was like, this good one's boring. We're going to go with the monopolist rules. We're going to, he used to vacation in Atlantic City. So he changed all the colors. He marketed it. And it became this great story of this man who built a wonderful game during the Depression in his basement. That was totally a lie.
Wow.
And as the case kept going, it just kept getting bigger and bigger. It's like he didn't even take it from Lizzie. It was a Quaker game for a while. And so everyone kind of made their own version. It was this hot mess. And unfortunately, she ended up with a promise to make her game that was never sold. It was shelved, and $500 for a game that is essentially the third best-selling board game after chess and checkers.
Oh yeah, and
Really
now there's
sad.
every version. So here in Hawaii, I have a Hawaii version, but I like I'm a traditionalist. I like I tried to like some, and I had an Aspen. I grew up in Aspen, Colorado. I had an Aspen version, and I'm like, nah, this doesn't feel the same.
Yeah, the class. I'm a fan of the classics too, and I grew up playing games, and so
Have you ever played Acquire?
I have not played
You'd
Acquire.
like that one. That's a classic. That's a
Board game?
investment. So it's look
Oh,
it up. Acquire.
Acquire. I'll
It's
look it up.
it's trading stocks and things like that. You'll like it.
So that's the big thing in Monopoly. Monopoly has cash and it has real estate. It doesn't have the other asset classes. So yeah, I'm definitely gonna
Yeah,
look
my
into
dad used to play that, with his friends. That and backgammon. He's from New York,
Mm,
but Acquire was a classic game that I'm surprised never really kind of made its come around because it was so
mm.
good. Yeah,
I'm gonna have to look
you
into
can get a
that.
copy probably on like eBay or something like
eBay.
that.
Yeah, yeah,
Yeah.
yeah. You know what's funny? I love how naturally we're having this conversation and then tying back to the book because chapter 2 is titled Starting from Go. And
Ah,
it's like really understanding where you started this game. Because in Monopoly, we all start at Go and we all start with the same amount of money. We all know life doesn't work that way.
that's
So,
true.
we pick up the strategies, the rules as they understand them, typically from our parents, the people we live with. And it's wonderful that you grew up watching your dad play Acquire. So you probably always had this like insight. What did your dad do, Anna?
He owned a ski tour operation company called Aspen Ski Tours, and it eventually became ski.com. So it was,
Amazing.
yeah. So he was
Amazing.
definitely very savvy, purchasing real estate, and he was an accountant. He went to
Mm,
school. He was the only one who got out of New York. All his relatives were there, but he went
mm.
out west and he was going to college in Denver in accounting, and then came out to Aspen, and he was doing the books for a hotel in Aspen, and he
Yep.
realized that there wasn't really a travel agency or a tour operation. It was for ski
Mm,
tours at the time, right?
mm.
And so he went down and registered, and he picked, since there was a phone book, he picked Aspen Ski Tour. So it would be the first on the first page of
Yeah,
the phone
so
book.
smart. So
And then he
smart.
met his partner who had a travel agency, and then they combined, and their slogan was "Best in the West" for a long time. And then the internet happened, and they were able to get ski.com for a pretty pricey amount, but still not, it was still worth it at the time, right?
Yeah, yeah, yeah.
And became like the largest ski tour operator in North America and beyond at
So
that time.
very innovative entrepreneur. He
He
pivoted
was.
multiple times.
Yes,
That's
he
amazing.
was.
And I imagine, as I did with my mom, you saw all of that like in real time behind the scenes. Dad's at the table working on something that looks important.
He was never really working at, you would go to his office. I didn't really see
Mm,
him, but I knew that he was always crafty, and
mm,
he always liked to make money. And he did other types of little, he always tried things out. Like there was the Palisades were kind of outside of Aspen, down valley a little ways. And they
mm.
started doing grape, wineries there. So he, invested in some wine. And like, I mean,
Yeah.
he was always wheeling and dealing and buying and selling property. And so I got to see that, and yes, I do think that people are kind of born with a bug. I mean, I started my first company when I was like 8. It was with my girlfriend, Ali Crum. We had a dog
Mm.
company, like Canine Villas, where we were
Mm.
babysitting dogs. I think you get the bug early,
Mm.
and it definitely comes from somewhere.
I love to hear this. There's like so many questions. I almost want to interview you now. And by the way, all my entire career, I've been working for almost 12 years out of college. And all I've ever done was work with entrepreneurs. I've never had like a real job. I've always been self-employed, and I've always just been talking to people just like you, Hannah. And I want to get to know. I just have this fascination about like everything that is your business, your father's businesses. There's something that I did a lot of research on in the book, and one of the strongest correlations of successful entrepreneurs, and we'll come back to that because there's a lot of unsuccessful ones, is they sold something as children. Isn't that
Mhm.
interesting? They had some
Like
sort
a
of business.
lemonade stand or something like that.
Yep,
Yeah.
yep. And it's so great to hear that you've been in the entrepreneur world for a very long time.
I was even selling pictures, like drawings to my parents. Like, you're
Amazing.
not getting them for free. You have to
Yeah,
pay
yeah.
for them.
Yeah. Well, you
Yeah.
know what's important about that is we all form a relationship with money very early. Most behavioral economic studies will tell you somewhere between 5 and 12 is when we really form our relationship with money, the way we see it, what we see it as. And it's so great that you saw it as something that can be earned, that you correlated it to value creation. Like, I just made this drawing and this is worth something. And so you're going to have to pay for it.
Yes.
Those are all very strong, wonderful habits that then determine financial success later in life. Because there's a lot of people who grew up, and for me, it was very confusing because it was first one, then the other. A lot of people grow up with scarcity. They grow up with money fears. And I work with a lot of, I have clients of mine who are like Harvard grads whose parents felt a certain type of way around money. They thought it was very finite. They thought it was very scarce. And because of that habit and the way they approached it, you pick that up as a child
Sure.
and you approach it that way. And a lot of the work that I do when working with entrepreneurs like that is, well, we need to change the way you view money because it's not as scarce as you think it is. There's a lot of it out there.
Right.
Uh,
36
trillion,
trillion.
you got it, at least in debt.
Yeah. Oh, yeah. Oh, yeah.
Yeah.
And circulating around there or whatever it might be.
Yep. And
Yep.
then a lot more once you look at like money supplies like M1, M2. And there's a lot of people trying to put money to work, venture capitalists, angel investors. So it's like, well, there's a bunch of money. It's
There
just
is.
not with you right now because you haven't understood this value exchange concept. Um, and sorry if I'm nerding out, but then there's this idea of bartering that we all picked up
I
from
love
adolescence.
bartering.
Me too.
I'm
I
a
think it's
huge
making a
barterer.
comeback.
Yeah.
Yeah, I think it's making a huge comeback. And I think as we have more AI and more digital currencies, we're just going to realize, do we even need to do all that? I'll do this for you, you do this for me.
Totally.
But did you know that that was a myth? This concept that money started as bartering, and then we figured out paper and metals and whatnot. It was in the Wealth of Nations as like, this is the history of money. But anthropologists have found out just in the last few decades that that's totally false, that there's never been a history of a civilization that bartered at scale.
Wow.
And so what we found instead is these ancient tablets dating back to Mesopotamia that were essentially debt covenants, like notes.
Mhm.
And it's actually the oldest form of writing that we have in any museum today.
Wow.
And so now they're thinking, wait a second, money might have predated writing, and we actually don't know how old it is. It could be as old as language for all we know. And I think that's just
It
fascinating.
makes sense. Yeah. I mean, and I think one of the things that really, I think a lot of people don't realize, and I think that we need like a redo almost, or like an update on that. The Federal Reserve is not the government. Like,
Bingo.
right. And, it shocks people when you realize that, okay, so some bankers, basically, let's call it what it is, right?
Yep.
They now are able to print money and then with interest to the American people, lend it. It has no backing, like the gold. It's not backed on gold. It's not backed on anything, but just paper. It's just worth paper, or whatever people think about it. And who gave them the right to just be printing paper? Well, we did, but who? Then it's like this whole, that's like the old. What is your thoughts on all that?
So many. Two initial thoughts. And one of the quotes that I open up a chapter with, I'm going to butcher the quote, but it's from Henry Ford, and it was on the Senate floor, I think like 1937. He said, "It's well enough that the Americans of this country don't understand money and fiat currency and central banking. For if they did, I think we'd have a revolution by tomorrow morning."
Right. Oh, I just got
And he
chills.
said that like almost 100 years ago, and no
Wow.
one's listening. And this
Yeah.
was him talking to a Senate committee. But the thing is, Anna, from my research and macroeconomic research at scale, money's always been that. It's never been anything else. So if you go back to 3000 BC, it was just trust. Here's this clay token saying that I've provided you a live cow. You don't necessarily have anything to give me right now. That's the myth, right? The barter. But who knows? Prior to that, it could have just been, hey, I've provided you some value. And so here's a note for future value provision. And that's exactly what it is today. And I think that you can look at ancient China and you can look at the Roman Empire, you can look at virtually any period in history, and it's always been something that we've all agreed upon. And the asterisk is until we didn't. That's happened a bunch. And that we all trust in and that we all value so we know that there's a higher order imposing that trust. And that's,
Yeah.
government is, yeah, that's money. That's money fundamentally. And government has to be involved because who's legally going to impose the trust? And banks have to be involved naturally because they're the creators of this crazy thing, or at least now they are. Prior to that, it was merchants. Prior to that, on and on. Governments did at one point. But I think it's this fascinating tool, in my opinion, and I write about this a lot in the book, of language. And so if I had to condense to like what is money fundamentally, I think it's the language that we all speak.
It is. And I think it's also a frequency and an energy.
Mhm.
And that's why
Yep.
money's got to flow. And if it doesn't
Yep.
flow, then it flows. Just like a water, you talked about waves. I'll talk about a stream. If it's
Yeah.
going certain, if you try to block it, it's going to get around it. It's going
Yeah.
to make a mess,
Yeah.
trying to flow.
Yeah.
So
It always
yeah,
has to move.
yes.
Yep. Yep. Yeah.
My dad always
I mean,
told me when I was young, he's like, he told me to spend my money. He's like, spend it, don't save it, spend it. Because I'm lucky though, because I had, a wealthy family or whatnot. But
mm,
I think it's true. It's like that scarcity model versus not. You get to spend it now, and you don't know what's going to happen later. But enjoy the money when you have it and spend it.
mm.
Don't just hoard the money.
Yeah. Yeah. And I think investing it is a form of spending that gives you that like flow, but
Yes,
that then continues the flow, right? Because it's not gone forever, and ideally it's coming back with some return. Yeah, I like that analogy. I'm on Substack now. I moved my newsletter to Substack. I love the platform. I haven't been on social media in 10 years, so that's what's going to be super weird for me to be promoting my book. But I love Substack. And there was a comment, I went back and forth with someone, a macro investor, and he said something along the lines of like, well, the closer you are, like proximity to the bank is critical. It's actually the first lesson in the book, right? Because the person who's closest to the banker in Monopoly for some reason always won. Uh,
mm,
so proximity to where the money comes out of is critical. And he's making this complicated argument. And I was like, yeah, I don't know why it doesn't click for people, this idea, because if we were talking about a water source and then putting a pipe to that water source, of course, the people closest to that water source and that initial pipe are going to get water first, and they're
right.
going to get and they're going to get more water.
Yes.
And so, banks control, to your point, the central bank, then the banks that they disperse to, they control the flow of money. And the people who have great banking relationships, the people who know how to bank and even cultivate investors, of course, they're going to pool more capital.
That's why the rich get richer.
That's right.
That's
That's
right.
right. Yeah.
Wow.
And
So, what would you say is one decision point or turning point in your career that changed your view of leadership and growth?
hmm, that's a good question. Um, I think it was COVID.
Mhm.
Um, I think nobody really understands where they sit in the ocean until the tide comes out. And that was a moment, in March of 2020, I was still an advisor. The stock market had made its largest drop in history in the shortest amount of time, 40% in under 30 days, right? Because we shut down the entire economy. So I spent like 2 weeks frantically convincing all of my clients not to sell their stocks. And the moment I put the last phone call down, I picked up all the missed calls that my brother had on all the small businesses in the area saying, Alex, what am I going to do? And at the time, this was like a few weeks before they announced federal relief.
Right.
And at the time, we didn't have a bookkeeping or accounting product. I was just advising my brother as a fractional CFO. And so once they announced the relief, they had this PPP, this EIDL, but it was like, hey, you have to show us tax returns and financials. And so many small businesses, Anna, did not have either tax returns up to date, and they certainly didn't have year-to-date P&L balance sheet. And so there was this turning point where it was like, well, my career is about to take off as a wealth manager. I've convinced all my clients to hold their stocks. Now is the moment where people are hiring new advisors. But the community and my brother's firm really needs to solve for this bookkeeping accounting shortage. And I had that hard decision to make. It's like, do I build my business? Do I build my brother's business? Do I help clients who are wealthy stay wealthy? Or do I help these businesses survive? And ultimately, I told my managing director, I'm going to take a break. I'm not going to acquire new clients. He's like, are you crazy? And I went to go help JBS build a bookkeeping business so that these businesses can get grants. And I never looked back. And that was a hard decision for me. It was a decision where, my wife, we were expecting our first, and we were living in a different state from my brother. And we were thinking, I'm telling her, hey, I think I have to go build a family business. And she's like, what are you talking about? You've been saying that you're going to stay far. You're just going to help your brother. You have a good thing going. And I was like, yeah, I know, but I don't know what the community is going to do without us. And I think that was the hardest moment. And I imagine that there was a lot of hard moments for a lot of people. I had family members pass during that time. I was locked in a 700 square foot apartment. It was wild. How was COVID for you, Anna?
COVID for me actually was a big growth opportunity for my business because I, specialized in digital advertising. That's what I wrote my book about. And at the time, I was getting ready to go to a SunPower conference because I was one of the approved SunPower vendors, meaning that people, when
Amazing.
they sold solar, they got, depending on how much solar they installed, they got credits, and the manufacturer approved me and my marketing. So they paid for the marketing. So it was a wonderful position to be in. And I was getting ready to fly to this conference, and then everything shut down. And so then they moved everything online, all the trainings. And it was an ideal opportunity because then finally people realized that they didn't care where you were. Because, all the way in Hawaii, it seemed too far, time zones, people wanted a local company. And then they realized they just wanted the best one at that. And it just happened to be that was me right at the time.
Amazing.
So it was really great for me personally. And being in Hawaii was nice because of all the nature and not being in a city and that. But I think I do resonate with the concept of, what people were going through though, because for me, I was trying to refinance my house. And because, I did lose a lot of clients though. I will say that was a great opportunity to grow solar, but I worked at the time with a lot of state companies and tourism focused, and there was no tourist. The whole state shut down. Yep. So we lost, half of our portfolio, and I didn't want to lose the team. So we made some, we had to make some changes and whatnot. But so it's definitely a turning kind of point of looking to the mainland to get work instead of here. But I wanted to get a refinance at the time. And because I'm a I own my own business, they didn't care about, unless you have a W-9, that's all the banks want. Yeah. So I kept having to resubmit because of the fluctuating books. And it took me, I want to say 9 months to get a refinance approved because I didn't have a W-2.
Yeah. Crazy.
Yeah.
Crazy.
So it's interesting.
A lot of what we do for our core clients, and circle back to this monopoly concept and banking, because these banks, a lot of them don't fundamentally understand entrepreneurs. They're looked at as risky investments until they're like crushing it, $25-50 million plus. And then it's like, oh, now we can be your best friend. And it's such a backwards concept for banks. And I think I'm seeing a lot of banks start to notice that the future of the economy is likely to be small business. And so they're making a lot of positioning pivots right now. I won't name the banks, but They're making some of the largest investments ever in attempting to get in front of small businesses. Um, and what we do a lot is we cover the gap because banking, like accounting, like money, is a language. And unfortunately, it's a language that entrepreneurs don't speak. So it's like, you don't, when the bank says we want a W-2, and it's like, yeah, I know, but I'm self-employed. We know exactly what they want. So it's like they want financial reports coming from the accounting firm. They want P&L by month, balance sheet by month. They want commentary to explain the volatility if you're in a seasonal business. And once you provide all of that, plus the last year's tax return and the confirmation that you filed an extension this year, then they're like, oh, okay, no problem. Here's your loan.
Yeah.
But it's like,
Yeah.
but they don't tell you that.
Yeah, I did have financial people. It was just COVID
Mm.
was it was so erratic that they were even more worried, right? Because of
Yeah, yeah,
all
yeah.
the changes
Yeah,
and
what happens if
yeah,
your revenue goes to zero
right.
tomorrow?
So but it
Yeah.
was just but I mean it was a vigorous process, but we got there. I got my
But
refinance.
yeah, again, weird that they don't also think, well, what happens if this W-2 person gets laid off?
Right. And then they also don't think about like, well, okay, well, what about like, your assets? I mean, you have money in the bank. Oh no, you don't care
Yeah.
about how much money you have in the bank. Right. It's like,
Yeah,
well, that doesn't make any sense either, right?
yeah. The way they
So
underwrite entrepreneurs is really
yeah,
backwards today. And I
it
think it
really
will
is.
change. I was just at lunch with a banker and they're like, yeah, and small bank. So we know the CEO, this is the number two, number three at the bank. And it's like, yeah, no, we're looking at entrepreneurs a little bit differently. It's like,
Yeah.
okay, it's about time.
So well, this has been wonderful. How can people get a hold of you? And like, are you going to have a book tour? What's your launch sequence?
Yes.
What's next for you?
That's a great question. So I'm going to do more of these chats. I have three young kids, Anna, of 5, 2.5, and 8 months. So I'm
Wow.
trying not to do like a physical book tour
Sure.
per se, but I'll be here in Boston. I'll make a couple trips to New York. I'm actually going to see Adam and Harper in South Carolina in a
Nice.
few weeks. Yep, I'm excited for that. But they can find the Small Business Money Game obviously everywhere: Barnes and Noble, Amazon, Target. Our pre-order sales are crushing right now. We just ranked number one in entrepreneurship on Amazon Kindle store, and this is
Awesome.
just on pre-orders. So we're very excited. A lot of organic word of mouth. I'll be doing a large in-person book launch at my local library, the Lawrence Public Library, which is fun fact where Robert Frost actually wrote a lot and read a lot. He's from Lawrence, where we're at.
Wow.
So I thought full circle.
Cool.
I went to the library in middle school, and I remember hearing that story back when I wanted to be a writer. So yeah, and I am actively writing on Substack. I have a weekly newsletter where I continue the money game, not just the small business one. I'm actually working a lot on AI. You and I should catch up.
Yeah.
And it's very awesome to chat with you. This has been a great conversation.
Thank you so much. And we're going to be providing all of the links to Rob and his books and his companies in the channel here below on YouTube. And please don't forget to join me next week as I interview another industry expert and topics to help you succeed on and offline. If you have not done so already, please subscribe to this channel. We are just shy of 200,000 subscribers, and that is because of you and your aloha. So continue to share this content if it feels compelling with your friends and family, so I can get more great guests like Rob to come and share their wisdom and passion with us. And I will see you next week in the Pixels. Aloha. I hope you enjoyed this episode of the Covert Code podcast. If you're loving the insights we share here, don't forget to follow us on your favorite podcast platform and leave a review. Your support helps us reach more digital innovators like you. Share this episode with your friends and colleagues on social media and help spread the word. And if you're in the solar space or just curious about where clean energy is headed, I'm thrilled to announce my brand new podcast, The Solar Coaster. This show digs into the real stories, trends, and challenges of the solar industry, with bold conversations and powerful takeaways you won't hear anywhere else. Follow The Solar Coaster now so you don't miss a single episode. Thanks for tuning in. See you in the pixels. Aloha.